Okay, so this video is going to be a little difficult to make here because the company hasn't been officially formed yet. And so a lot of this will be based on some speculation, some will be some rough calculations that may not be fully accurate. Just please keep that in mind as we go through the video. But what exactly am I talking about here? Well, as many of you know, I actually invested in Endeavor stock a while back, ticker symbol EDR, because they acquired the UFC. And I just wanted some exposure to the UFC because I feel that mixed martial arts is the fastest growing sport in the world, and the UFC is clearly the world leader of it. And so I felt like it was kind of similar to buying the NBA or NFL stock in the early stages of it. However, Endeavor recently announced, it was like about a week or so ago, that they're going to be spinning off the UFC out of the company and merging it with the WWE, which is the world leader of wrestling entertainment, and they trade under the ticker symbol WWE. And together, the UFC and WWE will form a brand new stock that will trade under the new ticker symbol TKO. Now, I know this is starting to get a little confusing here, so just try to stay with me here. But Endeavor is going to keep majority control of TKO, the new company, at 51%. And then the WWE, their stock is just going to simply convert into the new stock that will be turned into TKO. And so basically, if you want some exposure to the new TKO company that involves the UFC and WWE, well, you have a couple different options. You can have Endeavor stock, who will be sort of the parent company of TKO, or you can have WWE stock right now, which will simply convert into TKO, and then you'll have that pure play of the UFC and WWE. If you go the Endeavor route, of course, you'll also own everything else that Endeavor owns, which is a more diversified company. We'll talk about that. But if you want just a pure play, UFC and WWE, then you would want TKO stock, which as of right now is still WWE stock, but it will convert into TKO. That's obviously assuming that regulators approve the spinoff and the merger and all that stuff. But the question now is, how do I feel about all of this as an Endeavor shareholder? And that's the question I've been getting from you guys. How do I feel about this? Am I holding on to my Endeavor stock? Am I buying some WWE stock? Do I like the merger? How do I feel about it? So I'm going to explain all of that in today's video, all of my thoughts on it, and I'll even just give you a quick spoiler right now. First of all, I love the merger. I think it benefits all parties involved, and I'll tell you exactly why I feel that way. But perhaps surprising to you is that I am actually planning to sell my Endeavor stock, which I happen to be up on by around 15%. I think I'm up like 13.5% right now, something like that on my position. I'm actually planning to sell that, cash in some profits on it, and then maybe buy back in, but through TKO stock at a later date if I can get a cheaper valuation. And I'll explain, don't worry, I'm going to explain exactly why I'm doing that, and I'll explain all of it. So if you're lost, it'll make more sense in just a second. But let's just dive into this. I'll explain why I love the merger first, and then I'll explain why I'm actually selling my Endeavor stock. Okay, so why do I like the merger? Well, what you need to understand is that Endeavor doesn't just own the UFC. They're actually a much larger company with gigantic sales and marketing expertise. Not only do they own the world's largest and oldest talent agency called WME, who represents more Grammy and Oscar Award winners than anyone else in the world after merging with IMG to form Endeavor, but they also own PBR, which is the largest bull riding company in the world. They own the Miss Universe pageant, they own the EuroLeague of basketball, they own several other IPs, and they represent some of the biggest brands in the world, including the MLS, the Premier League, the Olympics, and much more. And altogether, they own or produce around 1,000 live events around the world each year, including concerts, sporting events, and much more. So they're just overall this like giant media behemoth. I believe they produce like movies. I mean, they do streaming. They do all kinds of stuff. And while the stock has been volatile since IPOing, mostly because of the pandemic and the struggling economy, they've actually done a pretty good job of recovering financially and becoming GAAP profitable last year. Now, the WWE also suffered during the pandemic because of a lack of public events, but later skyrocketed when people returned outside, just like the UFC did, although the UFC's numbers are more buried within Endeavor's numbers. But nonetheless, WWE stock soared because of it and is now trading near a record high coming out of the pandemic. And I would say that both stocks will probably perform very well over the long term, regardless of which is chosen. Endeavor is more diversified and will still keep exposure to both UFC and WWE, while the WWE will now have the UFC to provide even further growth as the newly formed TKO company, and they'll still have ties to Endeavor, which will help all of it. And the reason why I believe that this really helps all parties involved is because Endeavor is that master of maximizing value from these properties and creating huge synergies. In fact, when you look at what they did for the UFC, they practically doubled their sponsorship revenues, their media rights revenues, their total revenues, and their adjusted EBITDA profits ever since acquiring them in 2016. They even quadrupled their free cash flow too, which they point out that some of these areas, like sponsorship sales, for example, were actually stagnant for many years before Endeavor stepped in with their expertise in sales and marketing and everything else. And I think they want to do the same thing with the WWE. In fact, I think Endeavor wanted to flat out buy the WWE just like they did with the UFC, but after taking on so much debt from that first deal, they decided to instead spin off the UFC and simply merge it with the WWE so that they can gain majority control while saving billions of dollars from not fully acquiring them. And yet they can still create all of those synergies. If you look at a prior investor conference where Endeavor CEO was talking about their strategy that they have whenever they do mergers or acquisitions, well, he specifically said that their strategy is to cut costs while also growing revenues from multiple different categories. And that's exactly what they can get from an already profitable but still growing WWE. In fact, with the UFC, Endeavor was able to create operational synergies of $70 million. Now with the WWE, they're planning to increase that to as much as 100 million more. So the way I see it, Endeavor knows how to scale up and promote a business and make it even bigger and stronger and more profitable. And I think it's going to be ramped up to an even bigger level, having the UFC and the WWE together as a package deal. Think about all they can do with media, live events, sponsorships, consumer products, and more. Keep in mind that media rights for the WWE are set to expire later this year, and I believe the UFC's contract with ESPN also should be expiring like in another 1 or 2 years, something like that. And I just showed you, by the way, how Endeavor was able to double the size of the contracts for the UFC. So imagine the kind of leverage they'll have being able to offer both UFC and WWE content together for licensing deals to the biggest bidders like ESPN, Peacock, Paramount, HBO. There's so many options out there. In fact, I wouldn't even be surprised if they launched their own streaming service that combines all of their content at some point too. I'm already subscribed to UFC Fight Pass myself, and I love that I get to watch all the historic matches on it. So I just can't imagine a scenario where all the parties involved here don't benefit greatly from the merger. And I think that Endeavor is the perfect company to facilitate all of this and take those companies to the next level. So I see so many positives here, and I think these companies and their stocks are probably going to do very well for the long term. And so, if that's the case, if there's so many positives, then why am I choosing to sell my Endeavor stock? Well, it really comes down to two specific reasons. I actually have nothing wrong with these companies or their brands or their IPs. Again, I think that they're actually very strong, and I see a lot of great synergies here. However, there's two issues that I have, and one is that Endeavor is simply too diversified into too many different markets and brands and businesses that I don't keep up to date with myself. I don't track them, and I'm not very well experienced with them. I only bought Endeavor stock in the first place to have exposure to the UFC, which is something that I keep up to date with. I watch all the UFC events. I'm very knowledgeable about mixed martial arts. I practice mixed martial arts myself. So that's a market that I feel comfortable and confident investing in. But all the other things that Endeavor does, the modeling agencies, the acting, the singers, I don't keep up to date with any of that type of stuff. So it's not an area that I feel very confident investing in. And also simply just don't have the time or energy to keep up to date with all the different things that Endeavor is doing. I own so many different stocks, guys, and there's just no way that I can be bringing on new markets that I don't even keep up to date with on a personal level, and then have to keep up to date on an investing level too. So it's a little bit too much for me. I do, however, still want to invest in the UFC. I love the UFC, and I don't mind it at all being combined with the WWE. In fact, I see great synergies there, and I think that having ties with Endeavor is great for all parties involved, like I said before. So I wouldn't mind at all owning a pure play stock that is solely focused on UFC and WWE. And so then you might be asking the question, well, why don't you just take the profits from selling Endeavor stock and buy into WWE? Well, and WWE will eventually convert to TKO. Well, the reason I don't buy WWE is because I feel that the valuation is a little too expensive for me. And guys, it's just the case that in this economy where we might be heading for recession if we're not already in one, and in this type of market, I feel that I shouldn't be rushing into anything that I'm not 100% comfortable with. I'm actually being very picky in this environment, and I'm looking for great stocks that are trading at cheap valuations. And I personally don't see that at the moment. I don't see that yet with WWE stock or the newly formed TKO. Now, in the future, if the valuation gets cheaper, then yeah, I would want to buy in. But right now, the valuations here, they just don't really make all that much sense to me, and I'll show you what I mean. If we look at the valuation based on enterprise value to EBITDA, Endeavor currently trades about 20 to 50% more expensive than the sector on a trailing and forward basis. When looking at WWE stock, it also trades over 120% more expensive than the sector as well. And when you look at the proposed new company of the WWE merged with the UFC, in the merger presentation, they estimated a combined enterprise value. This is coming from them. They estimated $21.4 billion. So 12.1 coming from the UFC, 9.3 coming from the WWE. You get 21.4 in total. And then they calculate a combined $1 billion of EBITDA produced last year. So 0.6 coming from the UFC, 0.4 from the WWE. So if we try to make sense of all that, if we convert this into an EV to EBITDA valuation, I mean, you're talking about a trailing ratio here of around 21, which is practically the same as the WWE and much higher than both Endeavor's and the sector median. I mean, that's, considerably high. That's a pretty expensive valuation. That's like more than double the sector median. So that's expensive. And that's probably why their stocks haven't really soared by much since the announcement. I believe the merger was announced on April 3rd, and Endeavor actually dropped like 5% that day, and then it climbed like $1 or so after that from like 22 to 23, but it wasn't very good performance at all. The WWE stock actually did see much better performance. It climbed by about 10% since the deal was announced, but it was also kind of slow moving and it was dragged out for a while. And it actually dropped on the announcement day. So overall, I would say that the response has been fairly muted for both stocks. And I don't even agree with that response. I think that the stocks here are actually much better off with the merger, with the new synergies. I think the stocks should have rallied higher. They were already trading at an expensive valuation, so that shouldn't matter. I mean, the market should have rallied these stocks higher because the businesses have improved from the merger, at least in my opinion. So I don't even agree with that. But again, I just don't feel confident buying these stocks myself. I'd rather lock in my profits with Endeavor and see if I can get the valuation any cheaper in the future for WWE, what will eventually be TKO. And by the way, the combined companies of UFC and WWE, I believe they calculated in the investor presentation that they had revenue growth of around 10% in the past 3 years. I think EBITDA profit growth of around 20% per year. So the valuation can come down over time, but at the moment, I still feel that it's a bit expensive, and so I do not currently agree with it. And like I said, I'm just being picky in this environment. So locking in profits, gonna wait to see on the valuation. I'm going to wait for the dust to settle on this. I want to see TKO come out. Let's get some analyst predictions on how they're going to perform. Let's see how they're doing. Let's see how the market is doing at that time. I'm not trying to rush into anything that has so much uncertainty. I'll take my time, and if it skyrockets and I miss the boat, who cares, guys? There's so many amazing stocks out there at great prices right now. I couldn't care less. I'm happy to lock in some profits right now, build up my cash portion of my portfolio, have a stronger cash position going into this horrible environment where stocks I think are going to continue to be choppy and volatile. I might see some great opportunities for some other great stocks to pick up. So I feel very confident with my decision here. I'm totally fine with it, and that's how I feel. But I'd love to hear your thoughts down below. Sorry if I'm ranting a little bit, guys. I don't know if you guys like it when I rant. I don't know if you like to hear my personal opinions kind of flushed out more. But anyway, I feel like that's what I did in today's video. So I hope you enjoyed it, and I hope you're all doing well. Let me know your thoughts on this whole situation here, and if you own any of these stocks, and if so, why or why not. And we'll have a discussion down in the comment section. But thanks again for stopping by, my friends. I hope you're all doing well, and I will catch you in the next one. Take care, everybody. Bye-bye.